MCX IPF presents Simplifying Commodities, Futures, Options and Indices.
Commodities have become a mainstream investment choice in last year or so. 2021 will remain known as the year when both inflation and broad commodity investment woke up from their decade-long slumber. Broad commodity investments, physical or future contract-based, have been a very strong inflation hedge. This is particularly the case when inflation is unexpected, resulting from exogenous pressure or geopolitical effects. As inflation has proven more resilient than transitory, investors are searching for a way to protect their investments against erosion. Commodities also have added diversification and growth in the portfolio. We are in a scenario where the inflation globally is on a surge. The U.S. inflation hit its fastest pace since 1982 in the month of January. That's a 40-year high. Italy has seen the highest inflation in many years. UK has seen highest inflation in almost 30 years. And when you look at Germany, the inflation currently has been the highest since reunification in 1990. Australia then has seen inflation rising to the highest level since 2014 as well. The global wave of inflation has brought Pakistan to its knees. In this scenario, commodities portfolio comes with quite a few advantages. The price of commodities often goes up as demand increases. It goes down as supply increases. This type of a portfolio may reward you with higher returns than you depending on the market alone. Commodity prices won't always move in tandem with the stock market. Goods can't go bankrupt as some of the times companies do. And if history is any guide, broad commodities stand head and shoulders above many asset classes during inflation and geopolitical concerns. Currently, half of the 25 commodities in the Bloomberg Commodity Index are priced in backwardation. Let me give you the difference between the two. Contango is when the future prices are higher than the spot prices, and backwardation is when the future prices are lower than the spot prices. These are the highest levels of commodities in backwardation in last 3 decades. This is how some of the commodities have been performing in last 1 year. You have crude prices up more than 50%, coal up more than 170%, aluminum and zinc as well have done quite strongly. And while the rate hike cycles have begun and US Fed could be raising interest rates in the month of March, high rates have inverse correlation to commodities. But we also are in a scenario where we are facing lack of investment in mining and exploration, the global supply chain issues, lower infrastructure spend, the move towards energy transition. These are some of the reasons which are going to keep the commodity market still in play.
MCX IPF presents Simplifying Commodities, Futures, Options and Indices.
Brought to you by MCX IPF.